Well, you can finally expect home loans to get cheaper. From the 1st of October, all new floating rate personal or retail loans, which include home loans and car loans, will be linked to external benchmarks. This also extends to loans given to the MSME sector.
So this essentially means that now onwards, whenever the RBI cuts repo rates, it will automatically translate into the lower interest rates for your loans. This will be applicable for all new loans taken from the 1st of October. While some of the public sector banks have already started using this new system of fixing the interest rate, private banks are yet to implement this. My colleague Avni Raja joining us on the phone line with more. Avni, good morning. Definitely a ray of hope, let's remember, in turbulent times like this with regards to the slowdown and whatnot.
Well, that's right, Sanjana. In fact, this has been something, as far as cheaper rates are concerned, it's been something that the RBI, the Finance Ministry, in fact, the Prime Minister himself have all been talking about it and have been asking banks to cut rates. RBI has made it very clear that they're not happy with the way the banks are transmitting the rates. The cheaper, the lower repo rate by the RBI to cheaper loans for borrowers. So this new system of banks having to fix the interest rates will now be applicable, like you pointed out, from the 1st of October. And it means that henceforth, whenever the RBI cuts their repo rate, it will mean that banks will automatically have to transmit or, pass on the benefit of that lower rate to borrowers. Now, the important thing to remember here is that this will be applicable for all new loans that will be taken post 1st of October. But for existing home loan borrowers or existing borrowers, they can switch to this new system. All they have to do is, they can prepay their existing loan without any prepayment charges and ask their banks to switch them to this new system. It won't cost them anything except a small fee, perhaps, to switch. So this will be beneficial even to existing borrowers. And this is extremely important because, like we know, that this has been one bone of contention across the board as far as cheaper rates are concerned, saying that banks are not making the rates, interest rates lower.
Yes.
So borrowers are not able to get the benefit of that. So this is one way the Reserve Bank, in fact, in its notification, made it very clear that so far they are not happy with the way banks have been transmitting the rate cuts. And now this is the only way, perhaps, to go ahead and do it and allow borrowers to make use of the lower rate.
Absolutely. So some respite in that sense for borrowers and for consumers. Thanks, Avni, for giving us the interesting and important details.